right, let's talk about trading breakouts. I mean, we've all seen it, right? A stock just boosh, explodes higher, and we're all kicking ourselves, wishing we'd gotten in on the action. But what if you could actually spot those real moves before they even happen? Well, that's exactly what we're going to do. We're going to dive in and decode the top 5 breakout patterns that the pros live by.
But first, we got to talk about the elephant in the room. You know the feeling? You see a stock finally push past that key level, you get excited, you jump in, and then, bam, it just completely reverses, stopping you out for a loss. It is so frustrating. And look, if that's happened to you, trust me, you are not alone. So what is going on here?
Well, the simple answer is you're getting caught in what's known as the fake-out trap. Yep, these are these false moves, and a lot of times they're designed by algorithms and big institutions to lure in traders just like you right before they send the price screaming in the other direction. But hey, don't worry, because understanding what a real breakout looks like, that's going to be your best defense.
Okay, so to spot the real deal, we've got to look beyond just a single green candle crossing some line on a chart. That's not enough. We have to really get into the psychology of what's happening behind the scenes.
You see, a true breakout, it isn't just any old price move. It has to be decisive. It's a loud and clear signal that the entire market's mood has shifted. And this shift, it needs to be backed up by 2 crucial wingmen: momentum and, this is the big one, volume. Without those 2, everything else is just noise.
I absolutely love this way of thinking about it. Picture any of those sideways price movements as a huge battle, right? A massive tug-of-war between the buyers, the bulls, and the sellers, the bears. They are just locked in this epic struggle at a really important price level. A breakout? That's the exact moment that rope finally snaps. One side is completely exhausted, and the other side is now in total control. That is the move you want to catch.
So, when it all boils down to it, a high-probability breakout really has 3 key ingredients, okay? First, you need a really clear, well-defined level, a support or resistance that the market has bounced off of multiple times. Everyone sees it. Second, you need what's called a contraction phase. This is where the price gets super tight, like it's coiling a spring, just building up all this energy. And third, the explosion, that huge surge in volume right as the price smashes through. All right, so now that we've got the foundation down, let's get to the good stuff. Let's crack the code. These are the 5 key patterns that will tell you one of these powerful moves might be just around the corner. First up, we've got the triangles. Let's start with the ascending triangle. See that flat top line? That's like a ceiling, a wall of sellers. But, and this is the important part, look at the bottom line. You see those higher lows? That tells you the buyers are getting impatient. They're getting more aggressive, buying at higher and higher prices every time it dips. Now flip that idea on its head, and you get its bearish cousin, the descending triangle. It's the exact opposite. You've got this solid floor of support, but look at the top, lower highs. The sellers are gaining control, pushing the price down more and more each time. The pressure is building to the downside.
Okay, next up is one of my personal favorites, the flag and pull. Here's how it works. You get this huge, explosive move up. That's your pull. Then, the market just needs to catch its breath for a minute. It consolidates in this tight little downward sloping channel, and that's the flag. When it breaks out of that flag, man, it's like lightning a second rocket. All that original momentum just comes roaring back.
All right, let's look at a longer-term classic, the cup and handle. This one was made famous by the legendary investor William O'Neill. The cup part is this long, rounded bottom. It's a slow process where the big institutions, the smart money, are quietly buying up shares without causing a big scene. Then you get the handle. That's a final little dip, almost like a last chance to shake out anyone who's nervous before the real launch. A breakout from the top of that handle, that's your go signal.
And then we have the rectangle. Now this one is exactly what it sounds like, but don't let its simplicity fool you. It's powerful. The price is literally just bouncing around inside a box between a very clear support level and a very clear resistance level. The market is just balanced. But that balance never lasts forever. When the price finally breaks out of that box, especially with a big surge in volume, it often kicks off a brand new, powerful trend.
Okay, so let's do a super quick recap. A little cheat sheet to lock this all in. You've got your ascending and descending triangles. Both are typically continuation patterns. The flag and pull, another awesome continuation setup. The cup and handle, that's your big long-term accumulation pattern. And the rectangle, that signals a breakout from a range and the start of a new trend. Got it? Good. So, look, knowing these patterns is great. It's half the battle.
But now we get to what might be the single most important part of this entire discussion. How to build a filter to protect yourself from those awful, frustrating fakeouts. And this really gets to the core of why you absolutely need a filter. Let's be real, the market isn't always a friendly place. These false spikes, these fakeouts, they're a common tactic used to trap traders who get a little too eager. Remember, your job isn't to jump on every single potential breakout. Your job is to wait for the A-plus setups, the ones with the highest chance of actually working out.
So here it is, your fakeout filter. A simple checklist you can use right away. Number 1, you have to see a strong candle closing above the level, not just a quick little wick that pokes through and comes back. A solid close. Number 2, confirm it with that volume surge. For me, I want to see at least 1.5 times the average volume. It shows real conviction. Number 3, and this is a pro move, the best breakouts often pull back to retest the level they just broke. That's a huge sign of strength. And finally, just stay away from the low-volume penny stocks. They are a minefield of manipulation.
So, what's the big takeaway from all this? How do you actually put it into practice? I want you to start thinking of it like this. You finally have a roadmap to help you navigate the markets.
And with this roadmap, you now have 5 powerful, high-probability patterns that you can add to your trading toolkit. And please remember, these are not just random squiggles on a screen. They are pictures of market psychology in action. They're the literal building blocks of a solid trading strategy.
And that right there, that is the most empowering shift in perspective you can have as a trader. Once you really start to master these patterns, you stop seeing the charts as just chaotic, random noise. You start to see the story that the market is telling you. You see the battles, you see the quiet accumulation, and you start to see the potential paths forward.
At the end of the day, these patterns are your guide. The roadmap is right there in front of you. So the only real question left is, are you ready to learn the language and start reading it for yourself?